Hey, welcome back. It's Jason Walter here. Because the Fed right now is combating inflation by raising rates, they could potentially cause us to get into a recession. There's a lot of talk about, are we currently in a recession right now? But if we actually do get into recession, then we could be seeing more job losses. If we do get more job losses, we could be seeing more people losing their ability to pay their mortgages. So is this going to be causing a foreclosure crisis in the US? So in today's video, I'm going to take a deep dive into why we're not going to be seeing a foreclosure crisis, and that's because of mortgage loan forbearances. And to give you a very brief background regarding mortgage loan forbearances, have a look at this. And the reason why I'm sharing this with you guys today is that you still can enter into a forbearance program if you have a financial hardship. A forbearance is when your mortgage servicer or your lender, this is the company you pay your mortgage to, they allow you to temporarily pause or reduce your mortgage payments for a limited time. And for most mortgage loans, there's no additional fees, penalties, or additional interest that's added to your account. And a quick friendly reminder, if you do enter into a forbearance program, this does not mean your payments are forgiven or erased. In most cases, those missed mortgage payments are repaid over time or when you refinance or sell your house. So who's eligible to enter into a mortgage loan forbearance? And when is a deadline for applying? Because this is the key question that a lot of people are missing right now. So you have the right to enter into a forbearance if you have a financial hardship due indirectly or directly to this pandemic. You also have a right to a forbearance if you have a federally backed mortgage, which includes mortgages that are backed by HUD, FHA, VA, USDA, Fannie Mae, or Freddie Mac. And by the way, if your loan is not backed by the federal government, then other loan servicers may offer similar forbearance options. And when is the deadline for applying for a forbearance? If your loan is backed by HUD, FHA, USDA, or VA, you may request an initial COVID hardship forbearance as long as the COVID-19 national emergency is in place. So I actually did some digging for you guys, and I went onto the U.S. Department of Health and Human Services website here and actually found this declaration that the COVID pandemic is a national emergency was actually just renewed on July 15th of this year. Therefore, this public health emergency still exists and has existed since January 27th, 2020 nationwide. Therefore, if your loan is backed by HUD, FHA, USDA, or VA, you can enter into an initial forbearance program because we still have a national emergency for COVID-19 right now. In addition, if your loan is backed by Fannie Mae or Freddie Mac, there still is not a deadline for requesting an initial forbearance. I repeat, there is no deadline for requesting initial forbearance. I'm making this video today because I think a lot of people think that COVID-19 forbearance program is long gone. It expired a long time ago, but clearly this is a government website. This is on the Consumer Financial Protection Bureau's website. Again, that's the Consumer Financial Protection Bureau's website here. It clearly states that you can still get a COVID-19 forbearance program under certain conditions here. And by the way, if you do qualify for a mortgage loan forbearance, you can get one for up to 12 months, which basically means you can stop paying your mortgage for up to 12 months. Obviously, reach out to your loan servicer, which is the company you pay your mortgage payment to, in order to see if you qualify or not. But if you want a frame of reference, I'll leave a link below for this article here. Therefore, because the mortgage loan forbearance program is still active and valid as of today, it's my personal opinion we're not going to be seeing a giant increase of foreclosures anytime soon. And speaking of mortgage loan forbearances, here's the latest update from the Mortgage Bankers Association, or the MBA. They actually just announced this today at the time of this video, and they stated that there's approximately 405,000 homeowners who are still in forbearance right now. And according to Marina Walsh, who's one of the MBA's vice presidents, she stated the following: the overall forbearance rate in June stayed relatively flat with just a 4 basis point decline from May. Borrowers continue to exit forbearance, but at a much slower pace than 6 or 9 months ago. New forbearance requests, in other words, people who are requesting to get into forbearance, are still trickling in as permitted under the CARES Act. Again, the CARES Act was passed in March of 2020, which allowed people to enter into a forbearance if you have a federally backed mortgage and you have a financial hardship that's due indirectly or directly to the COVID-19 national emergency. In any case, this is resulting in very little movement in the overall percentage of loans in forbearance. If you guys may recall, we reached a peak of 4.7 million homeowners in forbearance back in May of 2020. And again, right now, it's approximately 405,000 people in forbearance. So obviously, a lot of people have exited forbearance. So speaking of that, of the cumulative forbearance exits, in other words, of all the people who have ended forbearances so far, at least through June 1st, 2020 through June 30th, 2022, Here's what people did. 29.4% resulted in loan deferral or partial claim. Here's what this means. A loan deferral or a partial claim will either move your missed mortgage payments to the end of your loan or put them into a lien repayable only when you refi, sell, or terminate your mortgage. So 29.4% opted for this option here, and 18.5% represented borrowers who still made their mortgage payments even though they were in forbearance program. Approximately 17.2% represented borrowers who did not make their monthly mortgage payments and exited forbearance without a loss mitigation plan in place yet. If you do enter into a forbearance program, make sure you contact your loan servicer prior to exiting to discuss your options for repayment. In addition, 15.8% resulted in a loan mod or a trial loan modification. And a loan modification is just this. This option might be right for you if you can no longer afford to make your regular monthly mortgage payment. Your payment can be reduced to an affordable amount, and your missed payments will be added to the amount that you owe. Your monthly mortgage payments could also be lower, but it could take longer to pay off your loan. So for example, one potential option for a loan modification is to get a 40-year loan. That basically means that your monthly mortgage payment is less than your original payment, but it's going to take longer to pay off because it's a 40-year loan and not a 30-year loan. In addition, approximately 11.2% resulted in reinstatements in which past due amounts are paid back when exiting forbearance. So in other words, that's a lump sum. But here's what the Consumer Financial Protection Bureau had to say regarding this. It says this option might be right for you if you want to pay back all your missed payments at once. And here's how it works. For most loans, loan servicers cannot require you to make a lump sum payment. So if you only hear about a lump sum repayment, ask about other options. Keywords here, they cannot require you to make a lump sum payment. Therefore, when you exit forbearance, you are entitled to other options. Out of all the people who have entered their forbearances so far, we have not seen a giant increase of people selling their houses. This is because only 6.7% resulted in loans paid off through either a refi or by selling their house. And the remaining 1.2% resulted in repayment plans, short sales, deeds in lieu of foreclosure, or other reasons. All right, to summarize today's video, if you have a mortgage that's backed by HUD, FHA, USDA, or VA, you can still request an initial COVID forbearance program because we still have a national emergency in place right now for COVID-19. Also, if your loan is backed by Fannie Mae or Freddie Mac, there still is not a deadline for requesting an initial forbearance program. Therefore, if you have a financial hardship and you have a federally backed mortgage, you can still request an initial forbearance program. And this is why, in my personal opinion, we're not going to be seeing a giant increase of foreclosures anytime soon. And with that said, hope you guys got a lot of value out of today's video. And if you did, please hit the like button. I greatly appreciate that. Hope you guys have an awesome day and look forward to seeing you on the next video.